In this video, we're going to talk about AEHR, go through basically the process of how it's going to get on our radar, the steps, the routines, everything that we do, where would it first sort of pop up on our radar? And then the second step to that is how do we enter a particular name like this? How do we define risk when we're doing or trying to find a way into this particular name? And then the third is what are the sell rules going to be, and how do we get out in a timely manner so that we actually make good amount of progress from this particular name. So one of the obvious things that we track is after it takes a run from $2 to $8, right in this area on fairly big volume, sticks all greater than 50 million, right? This one and this one, and high closing ranges. This should be on our radar. So one of the key watch lists that we keep track of is the HDF watch list. So the HDF watch list would the scan that we do on a weekend on the weekend routine should catch this particular stock right in this area. Now, the HDF watch list does catch a lot of stocks that do this and then completely die off, because those are just liquidity events. And what's important is how we separate something that is up and then is going to double again from something that just goes up on a one-off week and sort of rolls over. So there are a few things that sort of give us or tell us that this is not a one-off run and that it's gonna keep going and do something like this, double and double again. So the first thing that you should be watching for after you see something like this is how it acts on down days, right? That's very important. How it acts on down days will show you. So when the market goes under pressure, how is it acting? Is it just completely giving back everything, or is it actually trying to hold fairly well on a net basis? So when the market for AEHR, after it went from $2 to $8, it came in, and then as the market came in, it started going sideways instead of losing all of this gain that it made from $2 to $8. That's one of the first signs. That will tell you that this might be a potential stock that's gonna, there's more left in the tank, and whoever bought on this day is likely gonna come back and buy more on this, so that price can keep going up and up. The second thing is the tightness. So if the action gets very tight, so this sort of move from $2 to $8 is a very fast move because someone's caught on to the story, the potential, institutions doing their homework, right? All those things come into play and create this volume of greater than 50 million. So what we watch for is when a stock is under accumulation. When a stock is under accumulation, one of the first things you will see is that it gets super tight and the ranges narrow quite a bit. And this is exhibited by all leaders in the market before they make their big run up. So this accumulation or tightness, so this tightness is indicative of accumulation on that particular stock, right? And that's what we get in this particular area on this name. This is tight action, right? You're sort of boxed into a $5, $6 range after you had a crazy move from $2 to $8. So this tightness is completely indicative of whoever bought into this rally, they're now supporting price on down days, and they're really keeping the price with respect to ranges in a fairly tight range. So this is indicative of accumulation on the charts, and this shows up really well if you pull up the weekly on this particular chart right in this area. And this is the second tip off that you should be looking for, that this is not a one-off run. It has more in the tank. So that's covering our, the first thing. Do we have a process that's going to allow us to find the next AEHR in the markets when it comes by, right? So the key watch list, the HDF watch list is going to catch this. Then we watch for how it acts on down days. Then we watch for tightness, and then we could define and enter our risk. So if you've been here since August, you know that we were talking about this right in this $5 area, because it started respecting the $5 area, right? So even though the market rallied, it sort of came in, frustrated people, but it still held the $5 area. When the market came in, it still held the $5. So for someone clearly there that was just putting in a low and sort of in a tight manner accumulating a lot of stock, so that they saw the stock would pretty much do this after it's done being accumulated. So how do you enter and define risk? So one of the first ways is we look at levels, right? Which levels is a stock respecting? So is the stock, in this case, the stock is respecting the $5 level, which was fairly obvious. And as it rallied the second time, it respected the $10 level, right, at 10.38 and 10.11. So it respected the $10 level and then moved up once again into earnings. And then now it's sort of a really run up after filling its gap and then going up and out. So this was one of the first entries on this particular name. The market was a little bit iffy, but this one sort of squeezed out, up and out through 5, kept going, and then really burst on to the scene. The second entry is after it's doing its run. This one, which was basically above the $10 spot, built respect for 10, even though as the market came in quite a bit, right? This is a big RS zone is what we call it. So market's coming off of highs. The RS line is continuously rising. That tells you that this name is bucking the trend and is exhibiting a lot of RS. And this whole action in this area we call the RS zone. So this was sort of going into earnings. One could have actively traded this versus that 10 spot, sort of get 5, 6, 7% out of this pretty much multiple times if you were actively on it. Let me erase this because I've made quite a mess at the moment. So that's, the entries are fairly simple and straightforward, or at least I try to keep them fairly simple. I'm not a big line drawer like this or like that or like that, whatever the case might be. I'm more so, very level based. It's being supported at 5, supported at 10, and those are your entry areas for this particular name. Now, where do I place my risk? That's sort of the common question. If I'm entering at 5, I would have likely put stops at 4.90, 10 cents below 5, because I want to know if I'm right, I'm going to be right in a big way. If I'm wrong, I'm going to get stopped out very quickly. Same thing over here. As it came into and respected 10s, if my entry is anywhere from 10.10 to say 10.50, my stops would be at either 9.95 or right below or right at 10 for that matter, because I want to know if I'm right, I'll be right away. If I'm wrong, I'll take that small cut and see how it shapes up once again. So my risk on my trades is fairly, I'm picking spots on the charts where I feel we're going to get directional movement, and that really keys into this whole number concept where 5 holds rallies, 10 holds goes to 20, right? Now I know that you guys are probably like, if you miss it at 5, do you just sit and wait it out the whole time? No, I mean, I still use these sort of technical. So it came in, right, was supported at the top of this, so that could have been a potential area, right? You enter at 6 versus 650, support at 650, and then it rallies up and out. So technical analysis should still be a part of it, but the way I define my risk, I keep it very tight, because I'm picking spots where I feel the stock's gonna get directional movement. Let's talk about the latest entry area for me. So one of the first things is when I identify an entry, I'm always posting it on the TL private feed during the evening time. So when I do the key watch list review, and if I say AEHR 12.5, right, I'm really watching this level, and that level is really, a focus of mine. And I sort of write it down on my, do a visualization in the morning, do a situational awareness, just 15 minutes or 5 minutes of self-talk, like what's going on, is it Fed week, is it option expiration week, is there earnings season coming up? So things of that nature. I just sort of voice them out to myself, just so that I'm very aware of what the market is doing, and the situation that might play out in the markets. So the levels that are posted, like the ones I'm watching, are always posted on TL Private. I do post them in the key watch list review. So this latest entry area, let's really focus in on that now. So the stock was up. I did trade it versus the 15s. That was post earnings, but the market pressure really got to this particular name as it drifted in. So it made a trip down, it basically did a gap fill, which was this top area, and I had 12.5 as an area of interest. Now, what this particular name did, without getting too messy, is it undercut 12.5, and then on this particular day, undercut 12.5. So that's one thing. So it's undercut my level, 12.5. Then the second day, it held my level, which is again 12.5. And then on this particular day, it also held my level, which was 12.5. And then the fourth thing, it was zip up. So that's one of the things to keep an eye on. So I identified my level that I wanted to enter at, which was basically the top of this particular consolidation. Sort of stayed on top of it, even though we undercut that particular level, right? And then we undercut. The second day we held that level. The third day we held that level. And the fourth day we zipped higher. Now, one of the things is that I try to build conviction in my names. So when I'm entering, what are the edges at play? The clear edge is, highest volume ever. The second edge on this was, this is in a big RS zone. So this is a big RS zone. Market's moving down, continues to move up. Market's moving down, it sort of continues to move up. So on a relative basis, this name's really moved up while the market was in correction. So that's huge, right? Because when the trend resumes, it's going to zip. That's what it did. The third thing is that the IOF markets were also active. So if you have access to the IOF IBT as an all access member, the IOF market was fairly active on this gap up day. So that's one of the reasons I sort of kept on top of what I'm, trying to get into this name with respect to this particular level of 12.5. So one of the last things we could discuss is how do we sell this name. So my focus on this name is going to be, so one of the first things is I'm going to be watching the 17.5 level is going to be my sort of level to watch. Now I know this name does have a character, right? So it gaps up and it sort of fades out, gaps up and sort of fades out, gaps up, runs and sort of fades out. So it has the ability to sort of give back all of this and sort of go dormant and off the screen, and then it could maybe rally later on after it's done doing what it does best, which is sort of giving that up, but then really zipping up right back up. So sell rules for this are going to be watch 7.5. I have peeled quite a bit so that I could get closer to normal size. So my conviction was fairly high on this name because I had 3 edges going at the same time. At one point, I was probably long 40% position size right in this area. And as it made progress, I've sort of moved closer. I've sold in chunks of 10 twice already. So now I'm at about 20% size. And I'll sort of go down to 18% on that 17.5 break if and when it wants to do that. So the other thing, if it does firm up right here and allows the moving averages to catch up, then I might treat it a little differently. But at the moment, this name is going to be sort of a momentum name. I know it has the ability to sort of go dormant. So I want to squeeze it for as much gain as possible and then see if it starts to say respect 10. It could be that it comes back in, starts respecting 15, right? I don't know. But as long as if it really tightens up right below 20 and then sets up a pivot versus 20, then I'll add right back and I'll go back from 20% back to a 30% position, right? And then see if that, the new 10% that I added through 20 works for me or it doesn't. So it really depends on what the stock is doing. If it continues to show the ability that it's going to run and be a market leader, right? True market leader, then I'm going to treat it that way. If it comes in and does something like this, then I'm going to treat it a little bit differently. So I hope this was helpful. It's sort of, one of the requests was, you got to discuss your entries and get really into the details. So my entries are fairly simple. I'm not a big line drawer. It's just levels I see that are being respected. These particular edges that I have in the markets, I'm really keying in on those. And I'm just making sure that I have a process because I've missed quite a few, right? I'm not perfect. I've missed Task this year. I've missed Asan this year. I've missed Monday.com in the recent rally. So I'm really trying to hone in on, once a stock is sort of acting like a leader, I want to be on top of it, find my way in, and really go on for the ride. So that's been my focus because I feel that's one of my weaknesses in the markets currently. If you guys have any questions, leave them in the comments below. I would be happy to answer them. And I'll see you guys in the next video.